Hi, and welcome to session 6 of Moms on the Money Trail. Today we're going to be talking about the ins and outs of banking in the 21st century. My name is Katrina Boyer. I'm the Investor Education Coordinator for the Pennsylvania Department of Banking and Securities, and I'm so glad that you have joined us for this recorded version of session 6, Moms on the Money Trail. Today we're going to be covering the differences between online banking and virtual institutions. We'll talk about the pros and cons and things we need to consider when we're thinking about the right type of institution for us. And we'll talk about the things that we need to keep in mind no matter what type of financial institution you choose. First, I want to talk about the differences between banks and credit unions. A bank is a company that is in business to make money. They have shareholders, or they may be owned by a small number of individuals. Credit unions, on the other hand, are considered nonprofit organizations, and they are owned by shareholders. Members of a credit union are considered a shareholder. A savings bank is an institution that is really focused on helping you to save money to typically buy a home. There are not very many savings banks around anymore, but they are still out there, so we always mention them. So I want to talk about the difference between online banking and a financial institution that is only virtual. So when we talk about online banking, what that is it allows you to do banking online through your telephone's application for that specific financial institution. You can go online, you can log in using your credentials, but there's actually a physical institution that you're connecting to. There's a place that you could walk into the branch and conduct business. That is online banking. You can log in, you can pay bills, you can do all kinds of great things, but you're connecting to a physical location of that bank or credit union. An online institution is either a bank or credit union that is only present in the virtual realm, as far as not having a physical location for you to be able to walk in, deposit money, get certified checks, withdraw money, those types of things. All of their transactions are based online or through a device application. If you require assistance, you're going to have to get that help over the phone, through a digital chat, or even maybe through a social media conversation. So it's really important to understand the differences between the two. Virtual financial institutions offer most of the things that we're accustomed to when it comes to financial institutions. You have many, many ATMs that you can go to. You can access your accounts on the internet through your mobile devices application. And virtual financial institutions have regular security measures, and they are considered as safe as a traditional brick and mortar institution. So it's really important that we understand that there are the same protections available whether you have an online banking at a traditional brick and mortar financial institution, or whether or not you are accessing and using a virtual financial institution. So when we're thinking about whether or not we want to take our money and have a virtual financial institution, there are some pros. They may offer lower monthly fees. Some of them don't even have an overdraft fee, and sometimes they have higher interest rates available on savings accounts. The cons, though, are that there are no physical branches. It can be more difficult to get help from a live person because of the virtual aspect of it. And it can be hard to deposit cash because there's not that brick and mortar place that you can go to do that. And they may offer less one-stop options. And what I mean by that is, you know, being able to walk in, get that certified check, have a conversation with a teller, those types of things that we're accustomed to when we use a traditional brick and mortar location. But the reality is they all offer the same types of accounts. They offer checking, savings, many offer money market, certificates of deposit, and holiday or vacation clubs. Understanding what your needs are is what is really important. And so I always like to talk about that. Before you decide to open an account, you need to understand those types of accounts that I talked about so that you know what your needs are. Are you looking for an account that will allow you to write checks so that you can pay bills? Um, are you looking for a savings account to help you reach some of those short-term goals that we talked about at the beginning of this program? Are you looking to set up an emergency fund? Certificates of deposit can be a really great way for us to take a chunk of money that maybe we want to save for a vacation in a year. A certificate of deposit can be a great way for us to be able to put that chunk of money away and make sure that we have access to it when the certificate would mature at the appropriate time, hopefully just before you take your vacation. So you need to know what the needs are. And then you also want to think about what are the fees and features. Are you going to be charged a monthly fee for having that checking account? Many financial institutions do charge for that. However, if you have direct deposit, if you have a debit card, there are sometimes things that will trigger those fees to be waived. So you want to make sure that you understand that. Some of the features that they may offer is having a separate savings account that would allow you to easily transfer money from savings into checking should you accidentally overdraw your account. Or maybe they'll offer overdraft protection for a fee. You also want to think about what they're going to require for identification. Financial institutions are tasked by the federal government to ensure that you are who you say you are, and so they're required to check identification. So you want to make sure that you have the identification that you need in order to open those accounts. Now, when you open an account, there are books of disclosures. They're not super thick, but the print can be pretty small. So you want to make sure that you take a look at that information and understand the fees that you're going to be charged and all of the other things that they talk about in those disclosures. It's important to understand how your transactions are going to be processed and making sure that you understand all the fees and other legal information that you need to be aware of so that you can make an educated and informed decision about how what accounts you want to open at which financial institution. So, as you're thinking about opening an account, there are some questions that you may want to ask your financial institution. You may want to ask when your funds will be made available to you. If you deposit a check into your account, how long are they going to hold on to that check, or are they going to hold on to that check before you have access to it. You want to make sure that your deposits are insured. For a bank, that is FDIC insurance, and we'll talk more about those insurances later in this program. For credit unions, they're insured under the National Credit Union Association. So you want to make sure that any money that you put into the financial institution is actually insured should the institution fail. Keep in mind that doesn't insure you from overdrawing your account or having your account closed or those types of things. It insures the money that's in the accounts in the event that the financial institution is not able to stay in business. The other questions you may want to ask are, what fees might I be charged? Am I going to be charged a fee if I want a paper statement mailed to my home? Will I be charged a fee for allowing my balance to get below a certain dollar amount? Understanding the fees that you could be charged can go a long way in making sure that you have the ability to open the account that's right for you. You also want to ask how transactions are processed. Are they going to process transactions in order of the largest amounts first, down to the lower amounts? Are they going to process deposits before or after debits come out of the account? Having an understanding of that information can actually save a significant amount of money in overdraft fees, so that you know, because you need to know what to expect from your institution. You also want to ask them what kind of overdraft options they offer. Do they allow you to connect your checking account directly to a savings account? Are they going to charge you fees if you accidentally overdraw your account? Understanding those fees is vitally important, because if you don't know what you're getting into, you can pay an awful lot of money to those fees that you may be charged. So let's talk about an overdraft. An overdraft happens when you have more money that comes out of your checking account than you have in the checking account. And that can become really expensive. Some financial institutions charge $45 for every item that overdraws your account. So if you have 3 small checks or 3 small debits that process to your account, you could be looking at more than $125 in overdraft fees. And sometimes institution will actually charge you a daily fee until you bring your balance back up to zero. Knowing what your disclosures say will give you the answers that you need to understand how you're going to be charged for overdrafts, because that's all stated in those disclosures that I talked about a few slides ago. But you can avoid overdrafts by always staying on top of your balances. You know how much money goes in and you know how much money comes out. You can sign up to get text messages or email notices. One of my accounts that I have set up actually sends me a text message every time I use my debit card. It's a great way for me to stay on top of my balances. You also want to check to make sure that all of your deposits have been made available or are cleared for you to use. Especially on newer accounts, sometimes deposits can be held until they know that the funds are going to be cleared. You can also review your statements and your account balances online. Your financial institution is going to provide you with a monthly statement. It's important that you go through that every single month to make sure that all of the transactions are yours. If you have an unauthorized transaction, maybe your card got compromised and a criminal used it at a local store, or make an online purchase clear across the country, or maybe even out of the country. You're going to see that information in your statements if you didn't see it online before you got your statement. Keep in mind that you only have a defined amount of time from the time you get your statement to report an unauthorized transaction. It's often 60 days, but again, you want to check your disclosures to see what your institution's requirements are for reporting. As long as you report in a timely fashion, you often won't be held responsible for those unauthorized transactions, but you do have to report it, and you may have to file a police report as well. So keep that in mind. So overdraft protection can be fantastic. There are ways to connect your accounts. Like I said, from a checking account, you can connect to a savings account. You may be able to set up a line of credit depending upon your credit worthiness. You could have a line of credit available to you where if you overdraw the account, you can automatically transfer money from that line of credit. Keep in mind, a line of credit is very much like any other credit, and you're going to accumulate interest, and you'll have to make payments on that line of credit. So keep that in mind. I also want to talk about what it means to opt in. Financial institutions are now required to give you the option to opt in to overdraft protection when you swipe your debit card at a point of sale. And what that means is if you opt in, you're telling your financial institution that when you swipe your card at a point of sale, like a grocery store, a gas station, wherever it is you're paying for something, and you swipe your card, that if that transaction is going to result in an overdraft, you still want them to honor that transaction if they're willing to do so. Keep in mind, if you do that and you don't have a line of credit, or you haven't been able to connect those savings accounts, it could result in a very large overdraft fee that you may not be expecting. So making sure that you understand what opting in means is really important. If you choose not to opt in, when you swipe your card, the transaction is just going to be denied at the point of sale. You won't be able to buy that product using that card if you do not opt in. So keep that in mind and make sure that you make an educated decision on what kind of protection you're looking for. But the reality is, we all make mistakes from time to time. So if you've made mistakes, you may incur, again, those overdraft fees from financial institutions. If your financial institution denies a transaction and kicks it back to um, the person that you maybe wrote the check out to, you may be charged by that company for an overdraft or a non-sufficient funds. So making sure again that you understand those fees that you may be charged is really important. Your accounts could be closed by your financial institution if you don't keep a positive balance. If you have a consistent history of overdrafts or other problems with your account, the financial institution can decide that they don't want to have you as a customer, and they can close your account. You might be reported to a check verification service. What I mean by that is often if you write a check at a at a store for a purchase, your check will be scanned and money will come out of your account right away. If that check that gets scanned eventually ends up being non-sufficient funds, you may not be able to write a check to those stores again because your name appears on that verification service. And you could be reported to check systems. Check systems is very much like a credit reporting bureau that financial institutions use to determine if they want to open an account for you. So if you get reported to check systems, you may not be able to open an account until you make prior accounts paid in full or a certain amount of time, which is often about 7 years. But just like our credit reports, we have the right to check our financial institution report at Check Systems. We have the right to choose that. So you can go to www.consumerdebit.com and pull your report that they maintain, again, for financial institutions, banks, and credit unions. You can call the 800 number that you see here on the screen, and you are entitled to a copy of that once a year, just like you can your annual credit report. If you've had financial troubles, if you've had drawn accounts or accounts closed in the past, it might be a good idea to go ahead and check that on the check systems report. Also, if you think someone may have stolen your identity and opened an account at a financial institution, it's a good idea to check that as well. Now, there are some financial institutions that offer a fresh start. They're sometimes called second chance accounts. They may actually only allow you to have a savings account, and they may limit the number of transactions that you can have on that account. They may only allow you to do debit card transactions. They may not let you have printed checks. That's called a limited use account. These types of accounts are typically effective for a certain amount of time. So maybe you have a limited use account, and the terms for that are going to be that you keep the account in the positive without any overdrafts for a year or two, and they might convert it to a traditional checking account. Sometimes these second chance accounts will require that you do some financial literacy classes to help you learn to better manage your money so that you don't find yourself in that overdrawn position again. Second chance accounts are great ways to be able to get yourself moving in the right direction to being able to have an account at a traditional financial institution, at a credit union or a bank. Now, I mentioned you want to make sure that your accounts are insured. The Federal Deposit Insurance Corporation and the National Credit Union Administration insure your accounts up to $250,000 per depositor at each institution. So what that means is if you have an account or if you have multiple accounts at ABC financial institution, if that institution would fail, you will be covered up to $250,000. If by chance you have more money at that institution than $250,000 and you're the only account holder, you may actually lose money. So the key is keep your deposits below that threshold and understand what that means for you. But I want you to understand that Those insurances, the FDIC and NCUA insurance, only cover deposit accounts. They don't cover investment accounts. So they will cover your checking, your savings, those money markets, certificate of deposit. If you have an account where you're like a Christmas plan or a vacation club plan, those accounts are considered deposit accounts and those would be covered. But if you have an institution that offers you the ability to invest, understand that those investments are not going to be covered under that FDIC or NCUA insurance. Now, if you have some complaints, the Department of Banking and Securities is available to help you try to understand what's happened. And sometimes we're able to get some refunds to accounts. So if you have overdrawn accounts, questions regarding Reg D, which actually has to do with how many transactions you can have in a savings account before you're charged a fee, can be answered by my office. If you wire transfer money through your financial institution, we can help with that. If you're a victim of a scam or identity theft, we can help you to work through that. We can get you in touch with the right places, give you the resources that you need, and we may be able to help you understand if you have been a victim of using a company that's not licensed in Pennsylvania to lend money. And that would be by calling our office at 800 PA Banks. This is a number that you have been provided throughout today's program, throughout all this whole series of programs. You can call us at 800 PA Banks. Our staff will be happy to answer your questions. The call is free, and so are all of our services. If you have questions about a federal bank or credit union, you can go to helpwithmybank.gov for a bank. You can go to their website, or you can give them a call at 800-613-6743. You can also file a complaint or ask questions about a credit union at www.ncua.gov. Those are some great resources if you have questions about your specific financial institution or an institution that you're considering opening an account with. There are some other federal resources I'd like to provide you with. The Consumer Financial Protection Bureau is available at consumerfinance.gov. They have some great resources. If you have questions about FDIC insurance, you can go to fdic.gov. And the Federal Reserve Bank has some other great resources at federalreserveconsumerhelp.gov, or you can give them a call at 888-651-1920, and someone can give you a hand with that. This does conclude our formal presentation for session 6 of Moms on the Money Trail. I want to thank you for your time. Remember that to get credit for participation, after you watch today's video, you have to answer the quiz questions as well as 2 of the 3 discussion questions and send those to me at the email address that you see on the screen or that you get from the email